Hey guys, it's Fisayo here and welcome to this new episode of Finance Friday. In this video, I'll continue on the series we started where we started investing $1,000 every month in 5 different stocks. I also added more stocks and I even added more money to invest with. So in this video, I'll show you exactly how much I've made, how much it has grown, and some tips I have learned from my experience investing in the US stock market. If you're new to the channel, welcome, and if you're returning, welcome back. I'd really love it if you could hit that like button so more people can benefit from the knowledge and the analysis that we're sharing on here. You never know, you could be helping someone out when you hit that like button. Okay, without further ado, let's get to the video. As I mentioned, I'll be sharing some tips I picked up along the way of this investing journey and also my last year of saving all the way from 2020. In fact, that was one of the main reasons why I started the Finance Friday series, and now why I'm really doubling down on investing. I've said it on the channel multiple times before that I got to reading a lot of books. I read a book called The Millionaire Next Door about 4 times now. It has really broadened my mind about money. I learned about the prodigious accumulators of wealth, or PAWs. These are people who spend less, invest more, and live better lives for their future. I also learned about the under accumulators of wealth, or the UAWs, who think money is easily renewable. They spend anyhow, you only live once. Some UAWs are even people that have money but spend like it cannot finish. The whole idea is that as people who want to be conscious of money and want to grow their wealth, we should delay gratification. Don't eat your future just for quick enjoyment right now, and I couldn't agree more. I will leave a link to this book in the description below. It really changed my life, my mindset about money. You can even get it for free for 30 days on Audible with the link in the description. Okay, so here's the story. I caught myself looking at my Amazon wish list from last year. I hadn't checked in over 7 months. I kid you not. 7 months ago, I would have struggled to buy everything on that list. But that is way different now. Like, I even realized I had many of the things on that list, including this camera, and I didn't even think about it when I bought it. I just bought them without even thinking twice. So I think that's what happens when you sort of delay gratification. Because you've invested, you've sort of done the work, and what you had has multiplied, and your future self will thank you for it. Now, before I share exactly how much the portfolio has made in the past 2 months of this experiment, I want to share some tips for investing, some things I learned along the way. And if you want a quick refresher, I made a video on how exactly you can invest in US stocks from Nigeria. I'll have that video linked in the description below or in the card up above. Quick disclaimer, this is for educational purposes and not financial advice. Like, this will absolutely work 100% of the time. I mean, if they did work 100% of the time, we would all be millionaires in one remote beach in the Bahamas, but yeah, you get the idea. Anyway, the first thing I learned about investing is that we should pick companies, not hype. I saw this on a site called NerdWallet, and this ties to the idea that when you're buying stocks, you are actually buying a share of the company and you are a part owner of that business. You should remember that you're investing in actual businesses and not hype or news designed to push the price up. For me, I chose tech companies because I'm familiar with the industry. I read tech news every single day. I follow technology releases and I understand these companies and sort of their cycles. Another thing I did was invest in an ETF or an exchange traded fund. The one I chose was the ETF that tracked the top 500 companies in the US. That's called the S&P 500. This is a way of diversifying, so I have exposure to multiple industries while only paying one amount. And I also made mention of it in that video that I linked in the description. Another thing I learned is dollar cost averaging. When I started learning about investing, I heard this so many times and I didn't even get any proper explanation of what it meant to me. Like, what is dollar cost averaging? What does it mean? I'll show you guys an example real soon of when I invested in Amazon. Recently, Amazon stock fell because of the discouraging news in the earnings report that they put out. As the stock fell, it became sort of cheaper, so I bought some more. How does this tie to dollar cost averaging? How does this tie to the dollar cost averaging idea? To give you an example, which might get a bit complicated, I apologize in advance, but stick with me for a minute. I'll be using shares and stock interchangeably. It's basically the same thing. Let's say a company's stock is $100 and you're investing $200 every month like me. $200 will get you 2 shares of the company, right? That's $100 per share. 2 shares. Say some bad news occurs the next month and the company's shares dropped to like $50. Bad. Well, if you're investing $200 every month, that means with your $200, you can now buy 4 shares of the company instead of just 2 shares like the last time. So the stock kind of got cheaper. You get more for less. You can now buy more shares with the same $200. Now you have a total of 6 shares after you spent $400. That means the average cost of shares, is $400 divided by 6. That's around $66, not $50 or $100 like the share price was. But average cost is $66 for 6 shares. If you check it, if you multiply 66.6, which is the accurate number, times 6, you get 400. That $66 amount is slightly more than $50 and slightly less than $100. So that's an average cost. That's an average dollar cost. Any positive movement in price at this point will be helpful for your portfolio. This also works if the price of the stock goes up as well. If you buy it when it's high, it will average out too. That's why people say buy the dip. The whole idea is that a set amount of money buys more shares when the price goes down and buys fewer shares when the price goes up. It pays if you're consistent with investing, because when it evens out, you only pay an average price. Something else I learned about investing is overactivity or over trading and how it must be avoided, like checking up on your stock app every 2 seconds every day, or selling and buying too frequently instead of sticking to your schedule. Some investors recommend checking it maybe every quarter, some even twice in a year. The fact is that you've chosen these companies that you want to invest in, you've done your research, and you kind of understand these companies, you understand what they are about. So you are offering to get a share of their business. Unless something changes in the business model, the company structure itself, you really don't have any reason to sell a long-term investment. And holding on to your investment and investing consistently regardless of the stock price should eventually pay off in the long run. This is also even advice for myself, so I'll come back to this video. I'm also learning as well, so I thought to share it with you guys. If you're finding this video useful, do give it a thumbs up, as you will be helping even more people benefit from the knowledge that we're sharing in this video. All right, now to the main point of this video. How much did I make? Well, this is how much the portfolio has done so far. This is the app I'm currently using to invest in US stocks from Nigeria right now. It's called Trove. With the app, you can invest in US stocks, you can invest in Nigerian stocks, you can invest in Chinese stocks. I've mentioned it a couple of times in the Finance Friday series, and I have it linked in the description of this video. Fun fact, if you download the app with my link in the description, you get a free stock. This free stock is given to you as soon as the account gets approved. Take note, and you will get a free stock of either GT Bank or Dangote Sugar. Remember, you only get the free stock if your account is approved, and the value of the share is static and pegged at 5 units of the stock that you will get when you download the app. So do download the app with my link in the description. Anyway, let's go to how much I've made. So this is my dashboard currently, and as you can see, I have my wallet balance here, and tapping the arrows show me the Naira balance or the dollar balance. On the right side is where I have the actual amounts I have invested in stocks, and here you get to see the Naira or the dollar value of your shares. Just in case you want to sell them, you can just see how much Naira is. So tapping the arrow shows you the currency, and the green underneath gives you how much growth you've made within like a 24-hour period. When I tap on the amount, I get to my portfolio. Alternatively, I can go to the menu option and click portfolio, which will take me to the same page. Tapping on the arrow again here also changes the currency between Naira and dollar. So this is my live account with actual money I've invested. You can see a chart of how much your asset is divided by to get a pictorial representation. And for a list of the stocks I've gotten, here are some of them. Of course, I've got Dangote Sugar, I've got GT Bank, which is now Guarantee Trust Holding Company, which are Nigerian stocks. The US stocks are Tesla, which has grown by 4.5%, Facebook, which has grown by 2.8%, Alphabet or Google, which has grown by 3.5%, Amazon, which as I mentioned earlier fell, Apple has grown by 2.75%, and the S&P 500 has grown by 1.15%. Again, as I mentioned, the S&P 500 tracks the top 500 stocks of US companies, so it's a way of diversifying and having exposure to a wide variety of industries. You'll also notice that they are similar in amounts, around the $1,200 to $1,300 range in each stock, and that's because I'm investing the same amount consistently regardless of the price. So just like I mentioned, when I open up Amazon, you can see that it recently fell, which went from a $3,700 high to a $3,300 low, but my average cost was around $3,400 range, which is smaller than $3,700 and larger than $3,375, which is the current price. My total return is a loss of $10, which is not too bad. The cool thing is that while each share costs a whole $3,400, I don't have to pay $3,400 for one share. However, I can invest fractionally and buy 0.5 shares or half of a share or a quarter of a share. It's called fractional investing. You can buy less than one share. One of my better performing stocks though for me has been Tesla. As you can see, it's gone up quite well. For this, my average cost was around $683, which is much less than its current $714 price. It has grown by $31. I've made a return of $51, and I even bought some new shares at a higher $710. So that's what dollar cost averaging does. My average cost was $683, even though I bought it for a higher price of $710 or more. Again, the big idea is that a specific amount of money buys more shares when the price goes down and buys fewer shares when the price goes up. So if you've been investing consistently, the cost is relative to what you actually paid for, and it can even be lesser. In these types of things, it does pay to start small. You surely need some form of disposable income to invest. If you're not making money, you don't have anything to invest with. You also shouldn't invest more than what you can afford to lose. I'll leave a link in the description to the interview with the CEO of Trove, where we sort of discussed what a good percentage of someone's income that they can invest is. Anyway, that's all I have for now. I look forward to the next month where I'll be sharing the updates on this portfolio. Would I make gains? Would I lose? Make sure you've liked this video, and also make sure you subscribe to the channel and you have the bell icon turned on so you'll be the first to know when I post a new video. Thank you for watching. Make sure you download the app to learn about any of this stuff. Feel free to ask me any questions that you might have in the comment section below, and I'll see you in the very next video.